A 74-year-old grandmother in Illinois had her front door smashed in by sheriff's deputies with a battering ram. Not because she committed a crime, because she fell behind on a $6,200 property tax bill. They took her home. A home her mother bought in 1961. A home that was paid off. A home worth $180,000, and she walked away with nothing. That story did not have to end that way, because there was a form she could have filed. A single form that would have frozen her taxes, reduced her bill, or eliminated it entirely. She never knew it existed. Nobody told her. And right now, according to AARP, more than 9 million seniors in America qualify for that same type of property tax relief. Only 8% have ever applied. That's over 8 million people overpaying every single year, and the county is happy to keep cashing those checks. In the next few minutes, I'm going to show you the 3 types of property tax relief that exist in almost every state and why your county will never send you a letter about them. I'm going to give you the exact form name for your state. I'll walk you through a stacking trick that combines multiple programs to cut your bill in half or more. I'll tell you about the deadline trap that locks you out for a full year if you miss it. And I'll show you the step-by-step process, including exactly what to bring, what to say, and who to call. What I'm going to reveal in Section 5 alone could be worth over $4,000 a year to you for the rest of your life. Here's why this matters right now. If you don't file, there is no refund, there is no back pay. Every single year you wait is money you will never get back. But if you stay with me until the end, you're going to walk away knowing exactly what to do. And you could start saving on your very next tax bill. Here's the roadmap. Number 1, the exemption that shrinks what your home is worth on paper so you owe less. Number 2, the freeze that locks your bill in place no matter how much home prices climb. Number 3, the deferral program that can make your tax bill disappear while you're alive. Number 4, the stacking strategy that combines all 3 for maximum savings, and almost nobody knows you can do this. And number 5, the exact step-by-step playbook to apply before the deadline shuts the door. I'm starting with number 1 because this is where the biggest savings come from, and it's the one that 92% of eligible seniors have never touched. Let me ask you something. Do you know what your property tax bill was last year? The median bill in America is now around $3,100. If you're in Texas, New Jersey, or Illinois, you could be paying $6,000, $8,000, even $12,000 a year. And every year, it climbs higher. Now here's the part that should make you angry. Almost every state in the country, 39 states plus Washington, D.C., has a law on the books right now that says seniors over a certain age can reduce their property tax bill. It's called a senior property tax exemption, and it works by subtracting money from the assessed value of your home before the tax rate is even applied. Lower assessed value means a lower bill. It's that simple. But here's what the system doesn't want you to understand. It is never automatic. Not in a single state. You have to know the form exists. You have to fill it out. You have to file it. And if you don't, you pay the full amount while your neighbor down the street who did file that form pays $1,000 less for the same size house. Let me show you what this looks like in real dollars. Say you're Margaret. You're 68. You're a retired teacher in Texas. Your home is assessed at $350,000. In Texas, when you turn 65, you qualify for a $60,000 additional school district exemption on top of the standard $140,000 Homestead exemption. That means Margaret's taxable value drops from $350,000 all the way down to $150,000. At a typical school tax rate, that saves her about $1,400 a year. And Texas isn't even the most generous. In New York, Governor Hochul just signed a new law allowing localities to exempt up to 65% of a senior's home value from taxes. That's up from 50%. In Alabama, if you're 65 with income under $12,000, you can be exempt from all state, county, and municipal property taxes. In Alaska, the first $150,000 of your assessed value is exempt. In Colorado, 50% of the first $200,000 in market value is gone. Now here's the thing I need you to write down. The form is different in every state. In Texas, it's called Form 50-114. In New York, it's RP 467. In Illinois, it's PTX 324. But in every single state, you have to go get it. You have to fill it out. And you have to turn it in before the deadline. Nobody is coming to your door with this information. That alone is worth a phone call to your county assessor's office tomorrow morning. But don't hang up yet, because what I'm about to tell you next is what protects you for every year after this one. Here's the fear I hear from seniors more than anything else. It's not what the bill is today. It's what it's going to be in 3 years, in 5 years, in 10 years. Home values across America have exploded past $400,000 on average, and when your home goes up in value on paper, your taxes go up with it, even if you haven't renovated a single thing, even if you can barely cover groceries, even if you've lived there for 40 years. This is how seniors get pushed out of their own homes. The house is paid off. There's no mortgage, but the tax bill keeps climbing until they simply can't afford to stay. That's exactly what the assessment freeze was designed to prevent. And it is one of the most powerful tools available to seniors in America. An assessment freeze locks your home's taxable value in place. It freezes it permanently. So even if every home on your block doubles in price, your value stays exactly where it was the day you qualified. Your bill does not go up. Let me show you what this meant for one man. James is 71. He lives in Cook County, Illinois, the same county where that grandmother lost her home. James filed for the Senior Freeze program when he turned 65. His home was assessed at $250,000. Since then, values in his neighborhood have risen 30%. Without the freeze, his assessed value would be $325,000 right now. But because he filed that form, it's still locked at $250,000. At a tax rate of 2%, that freeze saves James about $1,500 a year. And it gets bigger every single year that values keep climbing. 5 years from now, that freeze could be saving him $3,000 or more. Now here's what's important. Most freeze programs are income-based. In Illinois, your household income has to be under $75,000. In Louisiana, under $100,000. In Oklahoma, under $25,000. You'll need to provide proof of income each year to keep the benefit. But in Texas, and this is why I keep coming back to Texas, the freeze works differently. When you turn 65, your school district tax bill is frozen. Not just the assessed value, the actual dollar amount, the number on your bill. It cannot go up. Period. As long as you live in that house. Now remember this. The freeze and the exemption are 2 separate programs with 2 separate forms. And in many states, you can have both running at the same time. That's going to matter a lot when we get to the stacking strategy in a minute. But first, I need to tell you about a third program. And for seniors who are truly on the edge, who are choosing between their tax bill and their medication, this one can change everything. In Cook County, Illinois, over the last 6 years, more than 125 homes owned by seniors were seized through property tax foreclosure. 125 families. Many of them owed less than $2,000. Some owed less than $200. The combined market value of those homes was over $108 million, and those seniors lost everything. Now imagine if those seniors had known about property tax deferral, because a deferral does something extraordinary. It lets you stop paying your property taxes while you continue living in your home. The state pays your bill for you. The amount becomes a lien on your property, essentially a loan, and it doesn't get repaid until your home is sold or you pass away. You stay in your home. Your heirs settle the balance later, and you never have to choose between your taxes and your life. Let me show you the math. Linda is 73. She lives in Minnesota. Her property tax bill is $4,200 a year. Her household income is $58,000. Under Minnesota's Senior Property Tax Deferral Program, available to anyone 65 and older with income under $96,000, Linda can defer any taxes that exceed 3% of her income. 3% of $58,000 is $1,740. So Linda pays that amount out of pocket. The state picks up the remaining $2,460 every year. Over 10 years, that's $24,600 that Linda didn't have to drain from her savings or her Social Security check. Now, there is a small interest rate on the deferred amount. In Oregon, it's 6%. In California, 7%. But in Vermont, and write this down, the interest rate is 0%. And in Texas, if you're over 65, you can file for a homestead tax deferral that stops all collection. No penalty beyond 5% interest. And here's the critical part. The county cannot foreclose on your home while you live there. That is written into Texas law. Remember those 125 seniors in Cook County who lost their homes? Many of them were eligible for programs exactly like this. They just didn't know. Now, here's where everything changes. Because what I'm about to show you is how you stop thinking about these three programs as separate options and start using them as a single, combined strategy. This is what the smartest financial advisors do for their wealthy clients. And you can do the same thing for free. It's called stacking, and it is the single most powerful property tax move a senior can make. Here's what I mean. In most states, the exemption, the freeze, and the deferral are completely separate programs. They have different forms, different eligibility rules, different deadlines, but they are not mutually exclusive. In many states, you can qualify for two of them. In some states, all three. At the same time, watch what happens when you stack. Robert is 66. He lives in Illinois. His home has an equalized assessed value of $200,000. Here's his playbook. First, Robert files for the senior homestead exemption. That knocks $8,000 off his equalized assessed value. Now he's taxed on $192,000. Next, he files for the senior assessment freeze. His income is $68,000 under the $75,000 limit. Now his value is locked at $192,000. It will never go up. His neighbors will. His won't. Then, if Robert still can't comfortably cover his bill, he applies for the Illinois Senior Citizens Real Estate Tax Deferral Program. The state lends him the money at 3% simple interest. He pays it back when the home eventually sells. His bill went down. It stopped rising. And the amount he can't afford is covered by the state. 3 forms, 3 layers of protection, 1 afternoon of paperwork. Now look at Florida. A senior can stack the standard $50,000 homestead exemption with an additional $50,000 senior exemption if income qualifies, plus the Save Our Homes cap that limits assessment increases to 3% per year. On a $300,000 home, that stack drops taxable value to $200,000 and locks it there. In New Jersey, seniors can combine the Stay NJ credit worth up to $6,500 with the Senior Freeze program and the Anchor property tax benefit. 3 programs, all stackable. And here's the key sentence of this entire video. When you call your county assessor's office, do not ask for the senior exemption. That's how you leave money on the table. Instead, say this exact sentence. What is every property tax relief program I am eligible for? Make them give you the complete list, because if you don't ask, they will not tell you. Now, everything I've shown you only works if you actually do it, and this is where most people fall apart. Not because it's hard. It's not. But because they don't know the exact steps, or they miss a deadline and get locked out for an entire year. So here's the step-by-step process. No guessing. No confusion. Step 1. Find out what you qualify for. Call your county assessor's office. The number is on your property tax bill, or just search your county name plus assessor's office online. You can also use AARP's free property tax aid tool. Just search AARP Property Tax Aid. Tell them your age. Tell them your approximate income. Tell them you own your home. And ask for every program available to seniors in your county. Step 2. Get the application. In most states, it's a single page. In Texas, ask for Form 50-114, the Residence Homestead Exemption Application. In New York, Form RP-467. In Illinois, PTX 324 for the exemption and a separate form for the freeze. The form is on your county's website. You can also ask them to mail it or pick it up in person. Step 3. Gather 4 documents before you sit down to fill it out. You need a government-issued photo ID that shows your date of birth. You need your most recent tax return or your Social Security benefit statement to prove your income. You need your property deed or your mortgage statement to prove ownership. And you need a utility bill or voter registration card to prove you actually live there. Step 4. File it before the deadline. This is the step where people lose thousands of dollars. Deadlines vary by state. In Georgia, it's April 1st. In some states, it's as early as February. In Texas, you can file anytime during the year you turn 65. But if you miss your state's deadline, you are locked out for 12 full months. There is no appeal. There is no grace period. There is no exception. Mark the deadline on your calendar the moment you find out what it is. Step 5. Follow up. 2 weeks after you submit your application, call the assessor's office and confirm they received it. When your next tax bill arrives, look at it carefully. Verify that the exemption actually shows on the bill. If it doesn't, call immediately. Mistakes happen more often than you'd think. Step 6. Set a recurring annual reminder. If your program requires income verification to renew, most freeze programs do. Put a reminder in your calendar for January 1st of every year. Renew property tax exemption. The county will not remind you. If you forget, the benefit disappears. And here's the bonus step that almost everyone skips. While you're going through this process, check whether your home's assessed value is even accurate in the first place, because your exemption gives you a fixed reduction. But if your home is overassessed, you're still paying taxes on value that doesn't exist. Look at the math. Your home is assessed at $300,000, but it's really worth $250,000. Your exemption is $50,000. So you're being taxed on $250,000 instead of $200,000. At a tax rate of 1.5%, that's an extra $750 a year, every year, on top of everything else. You can challenge your assessment by filing a property tax appeal with your county. It's a separate process, but it compounds the savings from everything else I've shown you today. And one more thing. If you're watching this video because you're worried about a parent or a grandparent, you can file this application for them. You just need their signature or a power of attorney. One afternoon with a parent and a stack of paperwork could save them thousands of dollars every single year for the rest of their life. That is one of the most valuable things you will ever do for someone you love. Let me bring it all together. Here's what you need to remember from today. 39 states plus DC offer property tax relief specifically for seniors. Not one of them applies it automatically. You must file. There are 3 types of relief. Exemptions lower your taxable value. Freezes lock it in place so your bill never rises. Deferrals let the state pay your bill while you stay in your home. In many states, you can stack all 3 together. That's where the real savings are. The single most important thing you can do this week, maybe this year, is pick up the phone. Call your county assessor's office and say this: what is every property tax relief program I am eligible for? Then get the form, gather your 4 documents, and file it before the deadline. 9 million seniors qualify, only 8% file. The other 92% are giving money away to a system that is perfectly happy to take it. Don't be one of them. Now, next week, I'm covering something that could be even bigger than this. There's a Social Security satisfaction rule that takes effect in 90 days. And if you're over 62, it could change how much money hits your bank account every single month. You do not want to miss that one. Subscribe now so it shows up in your feed.